As we venture into 2024, the landscape of investment opportunities continues to evolve, driven by technological advancements, economic shifts, and global trends. Exchange-traded funds, ETFs, have emerged as a preferred choice for many investors due to their diversified nature, cost-effectiveness, and ease of trading. For those looking to optimize their portfolios, identifying the best ETFs to buy now is crucial. This video will explore 3 top-performing ETFs poised to deliver substantial returns in 2024 and beyond. We'll delve into their unique characteristics, market positions, and potential returns on a $100,000 investment over various time horizons. By the end, you'll have a clearer understanding of these ETFs and how they can fit into your investment strategy, culminating in a call to action that could redefine your financial future. Number 1. The Vanguard Total Stock Market ETF, VTI. The Vanguard Total Stock Market ETF, VTI, stands out as a comprehensive investment option that offers exposure to the entire U.S. equity market, encompassing small, mid, and large-cap growth and value stocks. This ETF is particularly designed for investors who seek broad market exposure with a single, straightforward investment. With an exceptionally low expense ratio of just 0.3%, VTI represents one of the most cost-effective methods to gain access to the U.S. stock market's performance. This low-cost feature is a significant advantage, allowing investors to keep more of their returns. The diversified portfolio of VTI includes over 3,500 stocks, mirroring the performance of the entire U.S. economy. This extensive diversification not only captures the growth potential across different sectors and market capitalizations, but also mitigates risk by spreading investments across a wide array of companies. Historically, the U.S. stock market has delivered robust long-term returns, and by tracking a broad index, VTI leverages this historical performance, making it an appealing choice for both novice and experienced investors. Considering potential returns, VTI offers promising growth scenarios. For instance, with a 1-year investment horizon, its return of 27.6% could turn a $100,000 investment into approximately $127,600. Extending this to a 3-year horizon, a compounded annual growth rate, CAGR, of 7.7%, the initial investment could grow to around $125,000. Over a 5-year period, with a CAGR of 14.9%, the investment could increase to roughly $200,262. These projections highlight VTI's potential for significant growth, appealing to various investment horizons and goals. VTI's simplicity and comprehensive market coverage enhance its attractiveness. It caters to investors who prefer a set-it-and-forget-it approach, providing broad market exposure with minimal management effort. This makes VTI not only an efficient tool for portfolio diversification, but also a convenient option for those who might not have time or expertise to manage a complex investment portfolio actively. By investing in VTI, investors gain immediate access to a broad swath of the U.S. stock market, capturing the overall market's growth potential without the need to select individual stocks or sectors. Moreover, VTI's structure as an ETF adds to its liquidity and ease of trading, allowing investors to buy and sell shares throughout the trading day at market prices. This flexibility, combined with ETF's broad market exposure and low expense ratio, makes it a versatile component of any investment strategy. Whether used as a core holding in a diversified portfolio or as a standalone investment, VTI provides a solid foundation for building wealth over the long term. The Vanguard Total Stock Market ETF, VTI, offers an efficient, cost-effective, and comprehensive way to invest in the U.S. stock market. Its low expense ratio, broad diversification, and historical performance make it an attractive option for investors seeking long-term growth with minimal management. With potential for significant returns over various investment horizons, VTI stands out as a prime choice for those looking to capture the overall performance of the U.S. equity market. Number 2. Invesco QQQ Trust, QQQ. The Invesco QQQ Trust, QQQ is an exchange-traded fund, ETF, designed to replicate the performance of the NASDAQ 100 index, which consists of 100 of the largest non-financial companies listed on the NASDAQ stock market. This index is dominated by technology and growth-oriented sectors, reflecting the dynamism and innovation of today's market leaders. Consequently, QQQ has become an attractive option for investors aiming to benefit from the tech-driven future, offering exposure to industry giants and emerging tech trends alike. QQQ's impressive track record over the past decade can be largely attributed to the stellar performance of major technology companies such as Apple, Microsoft, Amazon, and Alphabet. These tech giants have not only demonstrated robust growth, but also significant influence over the market, driving the overall performance of the NASDAQ 100 index. While QQQ carries an expense ratio of 0.20%, which is slightly higher than some other ETFs, many investors find this cost justifiable given the potential for substantial returns. The ETF's performance has consistently outpaced many other investment options, making it a popular choice for those seeking growth. To illustrate the potential benefits of investing in QQQ, consider these performance figures. As of March 31, 2024, the Invesco QQQ ETF had a one-year return of 39.32%, a three-year annualized return of 12.39%, and a five-year annualized return of 20.62%. For a $100,000 investment, this could potentially grow to $139,320 in 1 year, $142,121 over 3 years, and $254,436 over 5 years, demonstrating the impact of compound growth. These figures highlight the strong historical performance of QQQ, especially driven by tech stocks. QQQ is particularly well suited for investors who are optimistic about the future of technology and innovation. The ETF's focus on high-growth sectors means that it provides opportunities for significant capital appreciation, making it an ideal choice for those willing to accept higher risk in pursuit of higher returns. This makes QQQ a strategic investment for individuals looking to leverage the advancements and economic contributions of leading technology companies. Moreover, the composition of QQQ offers a diversified exposure within the tech sector, encompassing various subsectors such as software, hardware, and internet services, among others. This diversification within the technology realm mitigates some of the sector-specific risks while maintaining the potential for high returns. As the global economy increasingly relies on technological advancements and digital transformation, ETFs like QQQ are positioned to capture the benefits of these trends, providing investors with a way to participate in the growth of some of the world's most innovative and influential companies. Overall, the Invesco QQQ Trust, QQQ, stands out as a compelling investment vehicle for those looking to capitalize on the growth of the technology sector. Its robust historical performance, driven by the success of leading tech companies, combined with its strategic focus on high-growth industries, makes it a suitable option for investors aiming for substantial capital appreciation. While the associated risks are higher due to the volatility of the tech sector, the potential rewards offered by QQQ can make it a worthwhile addition to a growth-oriented investment portfolio. Number 3. The iShares MSCI Emerging Markets ETF, EEM. The iShares MSCI Emerging Markets ETF, EEM, provides investors with exposure to large and mid-cap companies in emerging markets, making it an attractive option for those seeking international diversification and the growth potential of economies such as China, India, and Brazil. This ETF has an expense ratio of 0.69%, indicative of the higher costs typically associated with investing in these dynamic yet volatile markets. EEM comprises over 1,200 holdings, ensuring a broad and diversified exposure across various sectors and countries. Historically, emerging markets have exhibited higher growth rates compared to developed markets, though this growth comes with increased volatility. For example, with this ETF, a $100,000 investment over 1 year could grow by 11.73% to approximately $111,700. Extending this period to 3 years with an annual return of minus 6.54%, the investment could reach about $81,645. Over 5 years, with a 2.85% annual return, the investment could grow to about $115,085. EEM is well suited for investors who are prepared to accept higher risks in exchange for the possibility of higher returns. The significant growth potential inherent in emerging markets can greatly enhance the performance of a diversified investment portfolio, offering a promising avenue for those looking to capitalize on the economic expansion of developed regions. The Vanguard Total Stock Market ETF, VTI, Invesco QQQ Trust, QQQ, and iShares MSCI Emerging Markets ETF, EEM, represent 3 compelling investment opportunities for 2024. Each ETF offers unique benefits: VTI for broad U.S. market exposure, QQQ for high-growth tech stocks, and EEM for international diversification and emerging market potential. Investing in these ETFs can help you build a resilient and diversified portfolio, capable of weathering market fluctuations while capturing growth opportunities. Thank you for sticking around. Do well to like, subscribe, and hit that ring button to get notified when we bring insight your way. Until next time, thanks for watching.